It's midweek. Welcome to Business Incorporated live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the show today, the International Monetary Fund set to release its staff report and details of the Article 4 consultation with Nigeria in Washington. The International Monetary Fund sees Ugandan growth rebound in 2017-2018 on infrastructure. Plus, Angola's central bank eyes return of dollar clearing by start of 2008. Let's get started now. We're beginning here in Nigeria, where President Muhammadu Buhari will today perform the much-awaited launch of his administration's three-year economic recovery and growth plan in Abuja. According to a statement by the presidential spokesman, Mr. Femi Adesina, the ceremony will take place at the council chambers of the presidential villa at that should have been at 11 a.m. The Ministry of Budget and National Planning had earlier published the economic document while the president was on holiday abroad. The medium-term ERGP, which has been approved by the Federal Executive Council, looks to restore sustainable inclusive growth and development, invest in the people, and build a globally competitive domestic economy. And in fact, as we speak now, the President Muhammadu Buhari has launched this economic recovery plan. Meanwhile, the International Monetary Fund has scheduled the release of its staff report and details of the Article 4 consultation with Nigeria today in Washington. The release follows the conclusion of the consultation of the IMF staff to Nigeria last month. The IMF Executive Board welcomes the federal government's economic recovery and growth plan, but calls for stronger policies to achieve the objectives of the EGRP. The release is due at 2:30 p.m. local time. And to the markets in Africa were trading positive at intraday, with Egypt leading the pack. Markets in South Africa followed with 0.53% up. At midday, the Nigerian oil share index was up 0.05%. In the meantime, Nairobi closed in the red on Tuesday. And in the Middle East, petrochemicals lifted Saudi Arabia's stock markets this Wednesday as crude oil prices climbed to near a one-month high above $54.50 a barrel, with other markets slightly higher. All 13 Saudi petrochemical producers rose, with heavyweight Saudi Basic Industries adding 1.0%. The index was up 0.9% at intraday. In Dubai, most blue chips outperformed their smaller counterparts, helping keep the index steady near the previous session's close. The index was up 0.13% at intraday. In neighboring Abu Dhabi, the index was up 2.34%, supported by a 0.9% rise in shares of newly merged First Abu Dhabi Bank. Qatar was also up 0.34%. In Europe, investors are eyeing fresh economic data and renewed promises on financial regulation from U.S. President Donald Trump. Let's get details from Janelle Dumalon, my colleague at the Frankfurt Stock Exchange. Good afternoon, Janelle. Now, U.S. President Donald Trump remains adamant to do a major haircut on Dodd-Frank regulation. That's a set of rules introduced in the wake of the financial crisis. Is this much of a concern for the European banking authorities and the banks?
Well, I think it should be a concern for banks all around the world. So yes, definitely it is. Now, first let's backtrack. There were already key differences to how U.S. banks, how the U.S. and how Europe treated their banking sector in the wake of the financial crisis. Now, in the U.S., we saw decisive government action that meant U.S. banks landed on their feet, while European banks didn't sort of see the same reform that their U.S. counterparts did, and thus they are still in a worse position today. They're struggling with weak profits. They're struggling with historically low interest rates, and of course political uncertainty from key upcoming events like the Brexit. Now, if Dodd-Frank is to be repealed, experts say that the risk for European banks there could be that they would be emboldened to sort of take American banks' lead and engage in riskier business activities, and that we could very well be looking at a race to the bottom. But I guess there is some comfort to be taken from the fact that repealing Dodd-Frank promises to be a long, arduous process. Now, this is a very big package of regulations. It's an 850-page law that contains regulations governing financial services around car loans, mortgages, insurance, so everything basically. And as such, a wholesale repeal of the law is unlikely, but even repealing parts of it is likely to be difficult. President Trump will not be able to do it unilaterally. This is something that will probably have to go to Congress, which of course is Republican controlled in both chambers. But for the kinds of major changes that they want to make, they still need Democrat support. And of course, we know that majority of them support Dodd-Frank. So this may have a very outsized consequences for the global banking sector, but it is definitely set to take its time.
Now, a bit of healthcare news in the headlines today from U.S. lawmakers have started a second attempt to replace Obamacare, and drug maker GSK announcing a recall of 600,000 asthma inhalers. How healthy are healthcare share prices today?
Not quite so healthy. Healthcare stocks are the weakest performers in European indices today, right after auto stocks, who are performing a little bit worse. Now in the Pan-European stocks, Pan-European Stock 600, we saw healthcare stocks go down by nearly half a percentage point, although GlaxoSmithKline, who is affected by the recall, only saw its share price dip pretty marginally. So I guess it hasn't taken a massive hit. Now, it's hard to say how healthcare stocks will develop as a result of this second attempt by Republicans to replace Obamacare, because we don't know what is going to happen with the second attempt, really. It seems like the chances that Republican leaders will come to a consensus are looking quite slim indeed. Remember that the last attempt failed as more hardline conservative elements from the House Freedom Party caucus and more moderate Republicans clashed over wide-ranging changes to Obamacare that the moderate Republicans thought may have been a bit too aggressive. So now House Speaker Paul Ryan has been tempering expectations of a speedy resolution somewhat. So markets are likely to factor in this lack of certainty.
Well, Janelle, I think we'll just have to leave it at this point.